Happy Monday, traders. Okay, let's start talking about the most important market, and obviously that is crude. And look, it did do something important on Friday in the US session in that we got the first daily close for crude above that psychological $100 level. Being a Friday, obviously we also get the weekly close. So we got a weekly close as well as a daily close for crude above that crucial $100 level. We have 2 days left of March of trading, so it'll be very interesting to see exactly where we close for the month. But I would suggest if we do close above $100, which looks highly likely now, the bullish case for crude with these closes certainly does look very positive. Now, top side, where is the market focused on in the short term? Well, look, the spike high that we saw at the beginning of the war up towards $120, that is the obvious target. And I'd suggest that there's definitely going to be some good resistance there. It probably will be a hard level to get through. Crude's going to have to do a bit of work, some more negative headlines, etc. But no doubt, it does look realistic at some stage that we are going to go up and retest those highs. Further out though, if this does get extremely messy, which again is definitely a risk, the all-time record high for crude is sitting at $147, which crude saw in 2008, just before the GFC hit. So look, I'd suggest though, if we did at some stage go up to those levels and go up towards $150 and make new record highs, we are at the stage where crude certainly will be breaking things. So a massive negative for markets, for the economy, etc. But in any case, all eyes on crude. We have just opened for the week. At the moment, it is trading a touch higher from the close, but not too much volatility yet, but it's guaranteed to come. The weekend, the key takeaways, war-wise, the key headlines, really there's two. One is that Pakistan is trying to host and says that it's looking to host some mediation or some talks between Iran and the US in the next couple of days. Certainly we haven't heard any confirmation that is A, going to happen, and two, whether or not the Iranians are even interested in something like this. They have repeatedly said that they are not interested in negotiations, but who knows? If something like that happened, it would be a positive headline for risk, and obviously we might see crude a touch lower. The other headlines that we're seeing is a lot of rumours and a lot of talk about potentially US ground troops. A lot of troops have arrived, more are on their way, and obviously that is a big escalation. Iran has basically said that if US boots land on the ground, they will set fire to them. So not a good thing. So look, a very headline market, driven market at the moment. You don't know when these headlines are going to hit, but at the moment it doesn't seem like it's going anywhere positive. Okay, so moving on to the equity space. Look, equities are definitely, they've been going lower since the war started. S&P and NASDAQ were down for the week, around about 3%. Look, this is not, it's more of a grind lower. Something we've talked about before. We haven't seen, the big capitulation or panic selling yet in the equity space. And I dare say that is probably one of the risks. So obviously if crude continues higher, which is the main focus for every single market, the risk of finally getting some panic selling probably increases. So something to watch out for as the week progresses, and also as we get closer to the countdown to the 6th of April when Trump basically gave the ultimatum for the escalation of potentially hitting their power infrastructure, the Iranians' power infrastructure. Moving along to the bond market, bond yields have been screaming higher globally. Obviously tracking crude. Crude is inflationary, and so bond markets are pricing that in. We've got US 2 yields are sitting just below 4%, 10-year yields sitting below 4.5% on US 10 years. I'd suggest a break of 4%, 4.5% is going to be a massive negative for the markets. So keep an eye on what's happening with bond yields, because bond yields are super important, and what they're doing at the moment is not market friendly, that's for sure. And in the currency space, look, the currencies to watch there, we've talked about this. Keep it simple. Short Aussie or trading Aussie, it is a risk currency, so it will follow risk. Obviously, risk has been grinding lower, and the Aussie's gone with it. Before the war started, Aussie actually traded up to a 2-year high around about 71.70. It's down about 3 cents at the moment. But again, with confidence, we see equities and risk go lower. Aussie will go with it. Any sort of positive headlines, it's going to bounce. The other currency that is worth looking at the moment is dollar yen. Dollar yen's trading back above 160. That is not good for the Japanese. That is at 40-year highs, dollar yen. So that's a 40-year low for the yen. And especially when they import pretty much 100% of their energy, and they've got a super weak currency, that means that they are paying a hell of a lot more than everyone else. And it's also 160 has been a line in the sand for the Japanese and the Bank of Japan. So even though being long dollars across the board is working, it hasn't worked being long dollar yen above 160. At some stage something could happen there, but no doubt they must be thinking about raising rates sooner rather than later. They just have to. Bitcoin did have some resilience in the last week or two and really tried to trade above 70,000, but obviously it's been smashed lower, trading around that 66,000. The big level though is 60,000, obviously at some stage. If we do see that get taken out, I think we're going to see one of the biggest liquidation events for crypto. Won't be pretty. So that's something to watch out for. But in any case, look, the key takeaways again is that at the moment, it doesn't seem as if we are getting any closer to sort of any resolution. Market at the moment now is starting to look at Trump and question a lot of basically what he's saying. So when he's tweeting or talking, it is not having the same effect that it previously had, just because of that distrust. But good luck with your trades, and we'll check back in with you shortly.